I have with me Tom Noonan. He's a CEO at JouleX. JouleX is a provider of enterprise software application for monitoring, analyzing, and managing energy consumption of IP-connected devices in the data center and distributed enterprise. Tom, thank you very much for joining us.
Thank you, Yev. Good to be here.
Thank you. Tom, I wanted to talk about attracting investment to data center technology startups. Your most recent company, JouleX, is one of these. And you guys are working on attracting some additional investment at this point. Is there capital available today for data center technology startups? Is it out there? Is the money out there?
Sure. I think for the right idea, capital is available, and it's actually available from many sources. Traditional venture capitalists have invested in the energy efficiency or green tech type market and beyond, which are all technologies that can be used in the data center. But increasingly, sources of capital are coming from strategic investors, large companies who have a vested interest in the efficiencies of their data centers. So companies like Google and Intel and IBM and Cisco. But also maybe some of the untraditional players like private equity funds in New York. I think the message that it tells me is that energy efficiency technologies for the data center are highly in demand, that this is an area that is very fundable, and that a good idea with a good management team and good execution can attract capital. I think one of the interesting things about our business at JouleX is that we're an extremely capital efficient model. We build software, so the gross margin in our business is high. It's really a knowledge-based business, so we're being approached by all of those players, both in the traditional venture market as well as strategic investors and private equity investors. So we're finding the environment to be very, very attractive and company friendly.
What kinds of data center technologies, what kinds of products are most successful in getting funded today?
I think this is a good question, because when we look at the broader green tech space, we cover a lot of different technologies and a lot of different ground, from the demand side where the utility plays into hardware metering, smart PDUs, and then we take that spectrum all the way across to the software spectrum, which is all focused on the demand side, not the supply side. And so the types of businesses that we see getting funded in 2011 are businesses that are capital efficient. In other words, you don't need $400 million to go out and build a solar plant or a wafer plant. Software businesses are far more capital efficient than that focus on the demand side. So the data center is a huge source of demand for power. And most importantly, that are capable of high scale and bona fide ROIs. So the ability to license a product to a data center manager and have that data center realize a return on that investment in the first 6 months or 3 months of having made the investment through energy efficiency is very, very compelling. And these are the type technologies and ideas that I see getting funded today.
Can you compare today's climate for attracting investment to data center technology to pre-recession environment?
Sure. I think it's a really interesting question. I have been raising venture capital for over 20 years. JouleX is my 4th venture. And so if I go all the way back to the early 1990s in raising venture capital through our most recent recession and then into today, I think I see a lot of similarities. Investors want to invest in great teams. They want to invest in big ideas, and they want to invest in businesses that they believe can grow and generate a profit. So whether it was 1990 or 2011, I think those things remain the same. What I think is different today, even since the recession, is that venture firms want to invest in businesses that have a near term, meaning within 5 to 7 years, chance of success. The credit crisis and financial crunch caused many of these venture capital portfolios to remain illiquid. The companies that they had funded in 98 and 99 could not be sold or taken public in 2008 or 9. And so 12 and 14 years into a 10-year fund, they're still holding those illiquid assets, which is not the best for the shareholders. And so one of the big things I see is venture capitalists are really analyzing businesses to say, how fast can we scale this? How fast can we get it profitable? How efficient is the business model? And how efficient is and attractive is the return model for the customer, which will change the demand curve, because those are the type businesses that will grow. They will grow fast, they will provide a benefit to the customer, and most importantly, they'll provide the investor an opportunity for liquidity 5 to 6 years down the road, not 10 to 15 years down the road.
Are there more venture capitalist firms or other types of sources of capital that are interested in investing in the space today than there were, say, 5 years ago?
Yeah, I think when the green tech movement really hit in the early 2000s, 2001, 2, 3 time frame, there were only a handful of investors that took the risk to begin investing in green tech ideas. Investors in Silicon Valley like Kleiner Perkins and Foundation were some of the front runners, but today I would say the landscape is very, very different. While those investors are still active, there are many additional investors that have joined the fray. These include many of the Boston and New York early stage financiers, names you'd be familiar with like Sigma, Matrix, Highland Capital, etc. But in addition, we're seeing the advent of the strategic investors. So we're seeing GE through their investments in early stage data center companies. We're seeing Intel make investments in early stage data center companies. We're seeing Cisco making investments. I mean, these are companies that view energy efficiency across the enterprise as a strategic beachhead in their overall business strategy. And so rather than waiting for these companies to build, they're harnessing them at an earlier stage and incorporating their technologies into their mainstream products. So I think it's a very exciting time to be raising money today.
Tom, thank you very much.
Thank you, Yev. Good to be here.